All right, it looks like we've got people joining us. Good morning, everyone. I wanted to hop on here and introduce myself. I'm Jonathan Bricker, and I'm the chairman of the Arkansas District Export Council. And I want to welcome you, as Rudy said, to the second session of our Export Finance series. Today's topic is one that is near and dear to my heart, international banking products. It's kind of where I cut my teeth on the international side. The webinar today is only possible by the support that the DEC has received from the Arkansas Economic Development Commission and Arkansas Manufacturing Solutions. Thank you both so much for partnering with us and allowing us to put this series on. I really appreciate you all joining us today. For those that aren't quite sure who the DEC is and what we do, we're a private nonprofit organization that brings together experienced international business people with potential exporters. Each DEC member has been appointed by the U.S. Secretary of Commerce because of their real-world expertise in international trade matters. Now, having said that, we don't have all the answers, but we can introduce you to someone that does. We're basically a community of connections within the exporting world. My hope for the day or for this morning is that you walk away from this webinar with a little bit more confidence in your exporting abilities. And if you still have any questions at the end of the webinar and you don't feel comfortable asking it here in a public setting, I invite you to reach out to our website, exportarkansas.org, and we'll reach out to you. We can also have the presenter share the slides with you upon request. We want to be your strategic partner to help you grow your exports, which helps grow your bottom line. I'd like to introduce everyone today to our moderator, Rudy Ortiz. Rudy is recently retired from the AEDC and is the previous chairman of the DEC. Today, he's the owner of Strategic Business Services, LLC, where he assists companies in a wide variety of international and business and exporting needs. He's a certified global business professional, as well as a U.S. Department of Commerce certified export trade counselor. And for these reasons is why he's the DEC's education chair. And next, I want to introduce you to our featured speaker, Michelle Rock. If you receive the DEC monthly newsletter, you've seen her name and picture on each one. We're fortunate enough to have her provide our readers a monthly commentary of relative current trade topics. If you aren't receiving our newsletter, I encourage you to go to our website and sign up. Michelle serves as the International Business Development Rep under the Treasury Management umbrella at Arvest Bank. Michelle can support you when you see an opportunity to help your business and your client with international trade while mitigating risk. That's the key right there, is mitigating the risk. Her goal is to help assist you in safely increasing export sales and getting you paid faster. I mean, who doesn't want that, right? So anyway, Michelle, I look forward to your presentation and thank you for being here today. Rudy, thank you for spearheading this webinar. And with that, I'll turn it over to you.
Thank you very much, Jonathan. Excellent presentation on your part. The topic that we're going to be covering today is banking products that are utilized for international business, and I think that in an ideal world, everyone would receive cash up front. They would pay you before you shipped your products, and a lot of that does go on. But it puts you at a decided disadvantage because there are other companies that are selling similar widgets to whatever you're selling, or products or services and products that provide either credit terms, 30, 60, 90 day, or some of the products that we'll be talking about today, documentary letters, letters of credit, and other instruments that are used that are kind of a halfway point between the extreme of receiving cash up front or the other extreme, giving 120-day terms. And the idea is to be able to mitigate as much as the risk as you can, but at the same time making it attractive to the buyer of your products. And these tools that we're going to be discussing today provide precisely that edge. And so with that, Michelle, if you'll take it away.
Perfect. Thank you so much. I'll go ahead and get my slides up here on the screen. Make sure y'all can see everything. And 3, 2, 1. Can you see?
We can see it, Michelle. Good job.
Perfect. Thank you so much. Well, good morning, everyone. Thank you so much for taking time out of your busy day to attend our 1-hour webinar about export finance, specifically international banking products. Today, like Rudy said, we'll be discussing payments and financing as an exporter, and I'll provide a high-level overview of payment and risk mitigation, trade finance strategies, best practices, working capital programs, and credit insurance. But before we dive in, I wanted to just add on to Jonathan's wonderful introduction and give you some information as to why I'm here today. Like he said, my name is Michelle Rock Remmerscheid. I recently just got married, but I think I'm probably going to keep Rock professionally because it's a little bit easier. And I am the International Business Development Advisor here at Arvest Bank. I am based out of Rogers, Arkansas, but I cover the entire state of Arkansas and even small parts of Oklahoma and Missouri. I've been in international banking for about a year, so trust me when I say there is no bad questions. Please don't be intimidated and feel free to reach out. I know it's kind of daunting, probably the least fun subject out of all the exporting webinars, but we are here to help, and I remember how you feel. It wasn't that long ago for me. The very interesting, exciting part about my position here at Arvest is we are one of the few and really only local community banks here in the state of Arkansas with true international expertise. And that's why I'm here with you today. So please, again, feel free to reach out with any questions, use the Q&A function. We can pause at the time or we can address the questions afterwards, whatever you feel most comfortable with. But I will also be introducing you to a wealth of resources, so you can feel free to leverage those tools as well. But before we get started, we have some questions for you, Ms. Heidi.
Yeah, we're taking these poll questions to kind of get a good sense of where the audience is at and for perhaps where we should focus more attention on. So if you'll be so kind as to answer those, that would be great.
I'll go ahead and answer. Oh, I can't answer them. Dang it. Probably because I already know the answer.
Okay, well, it looks like to the question, what is the best method of payment for an exporter and or seller? Looks like 30% of the people chose letters of credit, open account, 10%, cash in advance, 60. And obviously, there's no wrong answer. Everyone has slightly different situations. And this gives us a good idea of where to focus additional attention on. Thank you so much.
Perfect. Yes, you said it perfectly. So as an exporter, of course, you want your capital and your cash in advance in your pocket as soon as you have that contract. But like what was showed in that poll, oftentimes your buyers aren't comfortable with cash in advance. So that's what we'll be discussing today, all the different ways that we can assist you in developing those relationships and managing the finance and the payment terms. That way you can meet in the middle. Okay, so this presentation is designed to provide a broad explanation of payment and risk mitigation, as well as trade finance strategies and best practices. But if there is one thing I'd like you to take away from this entire presentation, it is that planning on the front end will bring you success on the back end. Here at Arvest, we like to call this pre-planning, and pre-planning will allow both parties, so yourself and the buyer to be more comfortable with the trade and ultimately reap better results for the two of you. So you may be asking yourself, what makes this so important? I've already made sales after all. Well, like Rudy mentioned, having different payment and financing options ultimately make you more competitive. And it provides quote unquote bonus points in the sense that you'll also appear more sophisticated and experienced. So even if you still feel shaky and new to the overall experience, you will come to the table with that elevated level of sophistication as a business owner. I like to give the example that my boss likes to compare a sale to dating to marry. So when you're first approaching a sale, or in the metaphor of an individual, you want to get a feel for them, do your research, go on a few dates, learn what you have in common, maybe what you don't have in common, just figure each other out, if you will. So it is our hope that with this presentation that you will feel better positioned to develop an export financing and risk mitigation strategy, as well as a strategy to access working capital, so that when you're ready to quote unquote propose to your buyer, they'll say yes. So during this session, we'll specifically be covering 4 topics. The first, international payment methods. Then we'll discuss trade credit insurance, working capital financing programs, and foreign exchange markets. But before we dive in, I feel like it's important to level set on where exactly payments and financing takes place in your trade negotiation process. So on the screen, you'll see the life cycle of the exporting process. And as you see, finance comes towards the end, but don't let that take away from the importance of it. This entire cycle is extremely important, and luckily, the Arkansas District Export Council has already provided and recorded webinars on these various topics. So if you feel you're not too familiar with, say, building infrastructure or developing relationships, want to give a quick plug to check out our YouTube channel under Arkansas District Export Council, parentheses, ARDEC, so ARDEC. And under the videos tab, you'll find a variety of different recordings. I would recommend specifically looking for the recording of Grow Your Exports, a virtual boot camp video to learn more all about these various topics. But there's also a lot of great other videos on topics like doing business in Canada, Mexico, India, Colombia. You can learn about Incoterms, which we'll talk a little bit about in this presentation later on, and much more. So a wealth of information at your fingertips. But going back to our dating to marry metaphor, I think we can all agree that when you're thinking of marrying someone, you want to make sure you have a strong relationship. You have the important foundations, you have similar lifelong goals or plans, but you also have to make sure that you're both getting what you want out of that relationship. There's not just one individual benefiting while maybe the other is suffering or not getting what they want out of that relationship. So in this metaphor, that's where payments and financing comes into play. As one of my bosses has said before, a sale is just a gift until you get paid. So let's make sure your payments and financing and your relationships are strong and both parties are mutually benefiting from the sale or quote marriage. So on the note of developing relationships, I want to take a moment to point out that they really go hand in hand with managing payments and finance, as evidenced by that line connecting the two in the graphic on the screen. There's a level of trust that goes into payment terms and financing, which we'll get into in later slides. So while it takes time, and you could even say it's difficult to build trust and to form these relationships, just remember that it doesn't take much to lose that trust and lose those relationships. That's why payment methods are so important. And I have to give the deck a plug again, because they can really help with developing those meaningful relationships. So when managing your risk and getting paid, it's crucial to understand your baseline. When do you need the money? What is your risk tolerance? It's also equally important to understand the buyer's baseline, because again, You're developing that relationship. You need to know what they need out of this transaction and how that works with what you need out of this transaction. So understanding things like, can they even pay? Or if they can pay, will they pay? What is customary for this specific industry? You can't build a strong trade if you're unaware of where you and the buyer currently stand. So in addition to what is listed here, it's also important to decide when the risk of damage to the goods will pass from the seller, yourself, to the buyer, and who will cover the cost of carriage. This is defined within Incoterms, which are key. And I'll go over Incoterms a little bit more when we discuss the life cycle of letters of credit later on. So there are a variety of different methods of payment. And as you can see on the right-hand side, indicated by the black arrow, some are more advantageous for buyers or importers, while others are more advantageous to you, the seller or exporter. And based on the poll that we took at the beginning, it seems like many of you are familiar with these products, so that's great, but I'm happy to provide some additional information as well. So as you can see, while cash in advance is most ideal from your perspective as an exporter, keep in mind that as an importer, they're hoping for an open account because that's more advantageous for them. So especially with new relationships, it's important to try and meet in the middle as much as possible as you develop that trust and that strong relationship. Once you do build that relationship, you have worked with them a few times, it makes sense for that method of payment to change based on your situation. But for now, you want to try and meet in the middle. And I want to touch on confirmed letter of credit, which is the layering of a second U.S. bank's promise to pay in addition to your buyer's local bank's promise to pay. And if you speak with our international department here at Arvest, like my supervisor, Ashley, or colleague, Randy, if you're familiar with Arvest as well, you've probably talked to one of them before. They are awesome. They will often tell you that a confirmed letter of credit is typically not worth the cost. And this is frequently true, as there are only a few countries with political or solvency concerns strong enough to warrant what is essentially a second locally issued letter of credit. However, there are some countries like maybe Argentina and Egypt that rank among the most impacted by the US dollar availability or USD availability. And in those countries, we do recommend seeking a confirmed letter of credit. So following cash in advance and confirmed letters of credit, we have letters of credit, documentary collections, and opens accounts. And we'll dive into these options a bit more in depth a little later on in this presentation. So while cash in advance is a commonly used method, it can be difficult to buyers or to get buyers to accept this method, especially early on in the relationship. We highly recommend cash in advance. However, if you have a customized product, that would be difficult for you to sell to someone else should the sale fall through. So that being said, if you do have a highly customized product and are seeking a larger dollar amount of advanced payment to assist in your pre-export working capital needs, it is possible to offer the buyer an advanced payment bank guarantee so that should you not perform for whatever reason, they could have their advanced payment returned by your bank. Our bank issues these frequently in the Middle East and Asia, but they are common worldwide. So just a quick recap, cash in advance is common, is preferred, but because buyers are a little bit uncomfortable, it might be a little bit difficult to do initially, but we really, really recommend that with customized products that are difficult to sell or resell, if that deal were to go through, to really push for that cash in advance and maybe offering some a bank guarantee to make that a little bit easier for them. And I also want to provide some additional context on the third bullet. You might be wondering what a poor credit rating would be. And we would advise you that anyone who has a credit grade rating of C or lower, like Argentina or Venezuela, has a speculative credit, and you should therefore try to get cash in advance.
Michelle, I want to jump in just for a second.
Yeah.
Obviously there are some insurance products that are available for international business, but I think what Michelle is saying is definitely a good a suggestion, a good strategy, and on the customized products in particular, because if you're making bolts, just standard bolts, and somebody refuses to pay for them or to accept them, you can sell those elsewhere. But if you're producing something that's really customized for that particular client, the chances that you're going to be able to resell that product is just about zero. So that'll be a total loss. So that strategy is a really sound one.
Awesome. Thank you. Okay, so also wanted to touch on accepting credit card payments while using cash in advance. So as you can see on this slide, there are risks. There's risk with just about everything. So when should you use caution when accepting credit card payments? Well, we don't recommend accepting credit cards for any larger invoices. And by larger, I would say anything greater than $5,000 is a good cutoff. But again, this is based on your risk appetite, or for customized goods, because again, you can't resell it. But small e-commerce items are frequently purchased with credit cards, so you don't have to be so weary about that. As far as best practices, we recommend partnering with a strong merchant services company who can provide you insights into your client base and monthly sales. Additionally, payments received via credit card are not as safe as payments via wire, as they are not immediately available funds. So just keep that in mind. And before moving on to this next slide, I believe we have another question for you, Ms. Heidi. Oh, are we having issues with the poll question? We can move on. We don't have to do it.
Sorry, we are having issues. Just one moment. Let's see here. Okay. Got to get to the right thing. There we go.
Woohoo!
Okay.
All right. So just curious, how many of the folks in this audience have ever used a letter of credit? Don't worry, I won't call you out if your answer is no.
Okay. So it looks like about 67% of the people have used letters of credit at some point, and 33% have not. And even for those people who have used letters of credit, there's always something to learn. And Michelle's going to be covering other similar topics today.
Awesome. Yes, thank you so much. So for those who haven't used it, I am going to really break it down for you. And for those of you who have used a letter of credit before, you'll probably walk away with something new as well, because they are pretty complicated, but that's what we're here to help with and assist. All right. So what is a letter of credit? A letter of credit from an exporter's lens is your foreign buyer's bank's promise to pay if you fulfill the underlying sales contract. The bank will underwrite the buyer, it secures your payment, and it increases your competitiveness among other competition in your market. The main takeaway for letters of credit are that they act as mechanisms of payment and secure the transaction. Letters of credit are also customizable, and they do have different options like what is listed here on the slide. They can be sight drafts, which means the advising or negotiating bank pays you, the exporter, immediately, or a time draft where the exporter provides credit terms like Rudy mentioned earlier to the buyer. We already touched on confirmed versus regularly advised letters of credits in earlier slides, but to recap, a confirmation or confirmed letter of credit means that the US bank or the confirming bank has added its promise to that of the foreign bank or the issuing bank to pay the exporter. If a letter of credit is confirmed, it is advised through a US bank, and thus the document is called an advised letter of credit. Letters of credit also utilize the credit rating of the bank as opposed to the credit rating of the customer. So if you are working with someone who maybe is kind of falling behind in that area, it's definitely advantageous. Letters of credit are a little complicated, so it's extremely important to have a key banking partner to assist you with this process. Someone who's familiar with international banking, who's familiar with letters of credit, who knows the Incoterms that can really help walk you through this process. We definitely don't want you going into this blind or going through this alone. So with that being said, let's take a look at what all the letter of credit process looks like. And I'll give you a warning now, there's a lot in this slide, but I will walk you through it, I promise. Okay, so first I'd like to identify all the parties in this process. On the bottom right-hand side, we have you, the exporter. You may also hear the terms beneficiary and of course, seller. Just above the exporter, we have the advising and confirming bank. That's your bank that you, the exporter, are working with. I also want to point out that the advising or confirming bank might be any bank that the issuing bank has a relationship with in the United States. But that doesn't mean that that bank advises that letter of credit to you, or that the bank that advises that letter of credit has to be utilized in demanding payments under the letter of credit. So kind of complicated, I'll give you an example. We have a client that was working with the National Bank of Egypt, who we at Arvest did not have a relationship with. So in this situation, the National Bank of Egypt sends the letter of credit to a bank they do have a relationship with, like Bank of America. And Bank of America may either send the letter of credit direct to the client or may send it to us, the client's advising bank. And on the bottom left-hand side, we have the importer or your buyer. So for the letter of credit process, they are referred to as the applicant. So these terms are all kind of interchangeable here, but you want to be familiar with all of them. For the letter of credit process, or sorry, just above the importer is the foreign buyer's bank, referred to as the issuing or opening bank. They are the issuing bank because the importer makes the application to them, and then they issue the letter of credit. And of course, we have the little icons like the plane and the ship to indicate the goods being transported. And I'm sure you could guess the green bags and stack of money is indeed the cash flow. So let's start on what this process is actually outlining. There's lots of arrows. What does it all mean? So we start, the first step is the letter of credit process, beginning with the contract between the buyer or importer and seller, yourself, the exporter, agreeing to pay a stated amount provided certain conditions are met. This is indicated with the darker blue arrow going between the importer and exporter. And I have a little star here as well. So this is where it all begins. At this point in the process, it's very important to select your Incoterms up front, so you're aware of when the risk transfers from you, the seller and exporter, over to the buyer or importer. This is the second time I've mentioned Incoterms. If you're not familiar, I'll give you kind of a high-level overview of what exactly that means. So Incoterms are rules that define important responsibilities of buyers and sellers for the delivery of goods under the sales contract. They are the authoritative rules for determining how cost and risk are allocated to the parties. Incoterms are regularly incorporated into contracts for the sale of goods worldwide. And you've probably heard of two frequently used terms, so FOB or free on board, or CIF, which stands for cost, insurance, and freight. These two are frequently used, but also frequently misused, which creates risk for both parties. So it's very important that you're working with someone experienced with Incoterms so that you understand what you're working with. And with that being said, something else that's very important to note is that most people are still using the 2010 Incoterms rather than the most recently released update of the 2020 Incoterms. So when you're making this contract and you're talking with the party, you're taking them on these dates, you're getting to know them, make sure you confirm and understand that you're both using the same set of Incoterms, not maybe one person using 2010 and you're using 2020.
Yeah, Ms. Michelle, you know, while the 2010 and 2020 rules are not radically different from each other, they're different enough that you really do need to pay attention.
Yep, that's exactly right. A lot of it, yes, most of them overlap. Correct me if I'm wrong. I think there's about 3 ones that vary between 2010 and 2020. And if you happen to use those 3, that's when it's important that you both know where you're coming from on which set you're using. Perfect. All right, so once that contract is in place, we're moving on to step 2. And that's where the buyer or importer makes application with the issuing bank. It is extraordinarily important for the buyer and importer to request a copy of that draft prior to issuance that they can then pass on to you. At this point, your banker or freight forwarder can then advise you on any issues that may be inherent in that letter of credit draft. The reviewing of the draft by all parties allows you to avoid any expensive amendment costs prior to the letter of credit issuance. Again, pre-planning is your best friend. You want to make sure you have all your T's crossed and all your I's dotted, so that draft is imperative. So once you've reviewed the draft, the issuing bank then sends the letter of credit to your bank or the advising bank, who then forwards it to you. Only at this point should you then transport the goods to the importer. You never, ever, ever want to send any goods prior to receiving the issued letter of credit, or there's no guarantee you'll be paid. You might as well have not even gotten the letter of credit. So make sure that you have a letter of credit and it is active and approved before continuing with the trade. So once you've received the letter of credit, you then send the documents to your advising bank. Now, these are the documents for the invoice, the packing list, bill of lading, certificate of origin, really anything required to clear goods for customs. And occasionally there is an inspection certification or beneficiary statements. And of course, you're not going to have these documents until you actually ship the goods. But once received, you'll send them those documents. So then the last and final piece is once the buyer receives all of those documents that I just listed, the bill of lading, packing list, etc., they then send the payment through the issuing bank to the advising bank that then goes to you. So at a high level, what are the benefits? Well, for you as an exporter, the benefits of using a letter of credit can be summarized as the benefit of having a bank underwriting the buyer. You're able to secure your payment, assuming the documents are in order, and you're able to increase your competitiveness with enhanced payment terms. And as far as the importer or your buyer, they can be reassured that the goods that have been shipped are in order and what they're expecting, and that they don't have to pay until it is out of the exporter or your control. So I want to share another example of a client that we've been working with. So we had a client who did not use a letter of credit. They were the importer and they paid 100% cash in advance. This was 2 years ago. So 2 years went by with no updates on if they were ever going to get the product they purchased. And keep in mind, that money was long gone. Eventually, they did get a shipment and it wasn't what they ordered. They threw in completely different product to make up for the lack of the actual product that they ordered, or that was the assumption because there was really no communication. There was no contract in place. They had the money. They, the business owner did what they felt was best. But luckily for our client, they were able to use this unexpected product and pivot their approach with the product that he was expecting. And it actually turned out okay. But this is why letters of credit are so important. So you can ensure that you get the products that you paid for, you get them in a timely manner, you're able to retain control of your capital, and you can rest assured that, well, it's the actual product that you bought. All righty, so moving on to our fourth option here, we have documentary collections. And with a documentary collection, you are relying on the credit of the buyer and not the buyer's bank, as you would be with a letter of credit. Documentary collections also have the benefit of having both the buyer's bank and the seller's bank involved in the transfer of payment and shipping documents. For exporters, documentary collections are really only appropriate payment term if you are shipping your goods via ocean, because the main control in this transaction is the original bill of lading, which shows ownership of the goods and is required at the port to pick up goods. So you can think of documentary collections as almost a light or a diet letter of credit. They're sometimes referred to as DP, or documents against payment. Sometimes they're also referred to as payment against documents. It's pretty much a situation of you give me the payment and I'll give you the documents that you need to go be able to pick up the supplies. Documented collections are advantageous over letters of credit as they are lower costing. They're safer than open accounts. And of course, there's no credit component. So speaking of open accounts, let's talk about that for a little bit. So it seems like we're pretty familiar, but I'll just provide an extra explanation as well. This is our last payment option. And again, this is most advantageous for the buyer, which is in direct opposition for you, the seller. For importers, or the open accounts are widely used internationally when two trading partners have an existing relationship and essentially trust each other to complete their transaction obligations. But I cannot emphasize enough, we do not recommend using open account terms as an exporter unless your receivables are properly insured, which we'll discuss in just a bit. Rudy mentioned this earlier as well. The reason being is without credit insurance, there's no guarantee you will get paid. So remember, a sale is just a gift until you get paid. Open accounts are certainly advantageous for those buyers, but very, very, very risky for sellers like yourself, unless you have that extra protection in the form of credit insurance. So to summarize everything that we've gone over thus far regarding international payment methods, my main takeaway for you, again, is that the best practice is to be proactive. You want to take control of the transaction, decide what your best alternatives are, and prioritize them. When you're working with the buyer, be clear, name the payment method as a basis for the transaction that you want to use. If you're in a situation where the buyer is not comfortable with that transaction or with cash in advance, our suggestion to you would likely be letters of credit or documentary collections. With letters of credit, you'll use a letter of instruction and request a specimen copy or draft of the letter of credit prior to issuance. Again, this is key. You want to look at it and make sure that you understand the terms that you're agreeing to. For documentary collections, check out the collecting bank before the shipment as well. You want to make sure we can trust them. And at very last point, request a review from both your banker and freight forwarder prior to the shipment of any goods. You want to make sure that everything's in line and good and what you would expect for this transaction. Okay, so now that we've covered international payment methods, I'm going to move on to trade credit insurance, which I mentioned a few times when discussing open accounts. Rudy, I see that there's some stuff in the chat. Is there any questions that you think we should address now or wait to the end?
No, let's go ahead and wait until the end for those.
Okay.
And also, ladies and gentlemen, be aware that these other three topics that are going to be covered at this moment, it'll be a very cursory review because we're going to have other webinars coming up in the next couple of weeks that cover these topics in depth.
Yep, that is correct. This is going to be very high level. It's not going to be nearly as heavy as the international payment methods section. All right, so credit insurance is insurance that protects business-to-business accounts receivable against non-payment. So things like bankruptcy or if the client is slow to pay. It also affords political risk protection on export receivables or insurance that protects against payment default on your export receivables. There are quite a few considerations when deciding to obtain export receivables credit insurance. First, you'll need to speak with a good broker who can support the documentation required to make sure you comply with the insurance company's requirements. You'll also need to make sure your buyer is insurable. If they aren't already on the list, you'll need to allow for a lead time about 8 to 12 weeks for the insurance company to underwrite the buyer. And if you want to provide extended payment terms, credit insurance is still important, even if you have general ledger experience. So why do you need credit insurance? Credit insurance can help mitigate risk resulting from both commercial and political risk, like what is listed here on the slide. It protects against catastrophic loss. It makes it safe to increase sales to existing clients, safe to sell to new clients, whether they are domestic here in the States or an export client, safe to offer open terms to new foreign market, and an enhancement of your borrowing base, including things like your foreign receivables, your accounts receivable concentrations, and higher advance rates. You'll see at the bottom left-hand side, we've listed some underwriters on the screen, but I want to call out two in particular, Ex-Im Bank and ARI Global. Ex-Im Bank is the official export credit agency of the United States federal government. Here in Arkansas, Michael Dwiggins is our contact, and he is great. James Clark with ARI Global, which is Accounts Receivable Insurance Global, is our contact for ARI Global, and he's also a member of the District Export Council. So if you need an introduction to either of the two, please let any of us know, and we'd be happy to help.
Yeah. Also, if I can jump in right now on the insurance part, you all may remember probably a year ago or so, there was a ship that got wedged in the Suez Canal, and it was there for a month. And it was just a total disaster because of course it kept hundreds and hundreds of ships from being able to pass through the Suez Canal. Obviously, the products that were on that particular ship got stalled for a long time. It took about a month to get it unwedged, and also it sat on the side for about 2 months while all of this got rectified as to who was going to pay what. And so it's just a total disaster for everyone. And for those individual companies that did not have credit insurance for their products on that ship, it was probably a significant loss for them. And so credit insurance is just another tool to be able to mitigate the risk, and the cost of all these products, whether it's credit insurance or whether it's letters of credit, is so low that it just doesn't make any sense not to do it.
I would agree. All righty. So now that we've touched on payment methods and credit insurance, I just want to touch briefly on working capital financing programs. As Rudy mentioned, we do have more in-depth webinars coming up. So again, this is just very high level to introduce you to the concepts and how they work together with international payment methods. So the data that's referenced here on the screen is from a study that's a few years old, but it's still accurate as far as working capital cycles. US exports are in excess of $1 trillion, with 81% of those being open accounts. So if you're dealing with an open account, what does that mean for you? As you can see here, the average days of sales outstanding, that's the DSO there, for exports is about 68 days. So it's important to note that those 68 days, when that receivable is outstanding, you don't have that cash. However, some banks will lend on insured international receivables. So how can you access working capital loans? You need to be bankable, but what does being bankable even mean? To be bankable means that a business is able to receive some form of traditional financing package from a bank. Things that are taken into consideration are your personal credit score, your time in the business, profitability, debt service coverage, and collateral, but not all of those need to be in perfect order to achieve financing. Using the banking institution of your preference for things like deposits or treasury management, or credit cards will help that bank become familiar with your credibility and your business. And one of the biggest favors a business can do for itself is to have accurate and up-to-date financial reporting or bookkeeping. If you are highly skilled in your industry, but not in finance, you are certainly not alone. So our recommendation would be to hire out. Keep doing what you do best and leave the finance management to the professionals. And on this slide is some more data for you, displaying some more stats about working capital. I won't read it all to you, but summarize it. What is our takeaway from this slide? A lot of small firms export, and a lot of them have major concerns with financing. They need to get paid so that they can continue operating their business, but customers want financing options that these small businesses simply can't provide. So how do we overcome this? Again, by being bankable and coming to the table with trade finance options like letters of credit and documentary collections, so you don't have to worry about getting paid and you have financing to offer to these foreign customers. This combination sets you up for success, but you also need working capital. Why is that? Well, there are two types of financing that an exporter needs. Working capital for production and pre and post shipment costs like raw materials, inventory, labor, etc., and assuring sufficient cash flow while offering competitive terms. All of this is to ensure you can fulfill your export order. And two, to position the firm for export success with fixed assets, equipment, working capital, and debt restructuring to improve your competitive position. And this is to ensure export success and improve your competitive position to be more efficient. So how do we obtain this? The SBA, or Small Business Administration, is charged with helping U.S. companies export U.S. goods for economic development with the thought process of hiring more people. And they offer 3 great export options for you. You may have attended one of the many SBA webinars that they put on throughout the year. And if so, this shouldn't be new information for you. If you didn't, I'd love to tell you more about how the SBA can support you. So let's talk first about the International Trade Loan. And again, this is very high level. The SBA has more in-depth webinars about these quite often, but just want to introduce you to it. So International Trade Loan, while not typically used as much as the other 2 options, the International Trade Loan is basically a term loan that is usually project specific. It offers a 90% guarantee to lenders on loans up to $5 million, which will allow you to utilize your cash and other collateral to continue growing your business. You can also get insurance for up to 95% of the invoice. And as with every SBA loan, there is going to be a bank involved. So we recommend that you find a strong bank that has plenty of SBA experience. Have to give Arvest a plug here because we have many who are experienced with the SBA. The second option is the Export Working Capital Program, also referred to as EWCP. And the Export Working Capital Program is utilized for access to cash so that you can fulfill orders being placed by international buyers. This is for all your export working capital needs and is really advisable for more seasoned exporters. Same thing as the International Trade Loan, the SBA offers a 90% guarantee of up to $5 million. And for more information on the Export Working Capital Program and any of the loans, you can find out more at their website, sba.gov, or by calling your international banker. And the third and final program I want to touch on today is Export Express. Export Express really is a fantastic program that we often recommend. I have several clients that have actually used it. It can be used either in a term fashion or a working capital fashion. The Export Express can offer longer terms, credit line options, and loan guarantee options, and can be used for both domestic and foreign transactions. And it has a few more features on this slide. So if you're considering any loans from the SBA, you may want to ask your bank if they are an SBA preferred lender, which makes the process a little simpler since they already know your banking habits. Lending decisions will then be made in-house, making it faster and more efficient than some other options. Export Express is ideal for export promotion and development needs like website translation and localization, trade shows, foreign marketing activities, travel to meet with foreign buyers. And speaking of export promotion, myself or any of the other members of the deck can introduce you to the amazing people at the Arkansas World Trade Center. Everybody there is subject matter experts when it comes to different territories, and they are instrumental to exporting. You might have been in one of our recent webinars where we actually had people come on and talk about getting assistance and how much it benefited their business. So definitely worth looking into. They can also introduce you to different grants to help offset some costs of establishing business internationally as well. Thank you for your patience. I know we're almost out of time, just a few more slides, and I promise I'll let you go and we can answer some questions.
Ms.
Yeah.
Mr. Shred, if I can jump in, I really want to try to emphasize why working with the SBA loan programs is so advantageous. In many cases, especially smaller companies and to some degree medium-sized companies, they are bankable, but they are maybe a couple of weak areas. Perhaps they don't have enough collateral to satisfy their bank and to be, in essence, bankable. Well, that's where the SBA comes in. It provides the guarantee to the bank that makes the bank feel comfortable to do the loan, because they know that if something does go south, they're going to get paid anywhere from 75 to 90%, depending on what the loan agreement was. And so this is a tool. The SBA is a tool that provides you the means to be bankable and to get loans from the banks that allow you to the competitive edge that you need.
Perfect. Thank you, Rudy. All righty. So briefly touching on foreign exchange, we know it's more ideal and easiest to perform trades in US dollars or USD. But by leveraging foreign exchange, you can have a competitive advantage over your domestic competitors. So for example, if you can dual invoice and allow your clients to pay in their currency, it makes their business easier and your business more appealing. There are a variety of different ways to protect yourself against currency fluctuations should you decide to accept a foreign currency. Foreign exchange markets and fluctuations can affect your business. So it's important that you have a conversation with a foreign currency provider, whether that be your bank or a foreign currency hedging provider, before you quote in foreign currency. And won't read off all the frequently asked questions, but I want to list some of the questions we've received before, like, who do I talk to first about payment risk? What is political risk versus commercial risk? And can I finance my insured receivables with a bank? And the answer to all of these questions, talk to your banker preferably, and one that has experience in subject matter expertise in international trade. That is key. Here at Arvest, we have 2 certified documentary collection specialists, a program managed by the International Chamber of Commerce. We have been described as small but mighty, and we have over 50 years of international trade experience. So if you do not have a well-equipped banker with international expertise, we would recommend an attorney or CPA with international expertise. The key here is they have to have experience with international to truly be able to properly assist you. And if you're not sure where to even start, feel free to reach out to myself, the Arkansas District Export Council, and we'd be happy to connect you with someone as well. And if you're not sure what attorneys or CPAs or just generally have a lot of questions, use your resources like us, your local bankers, freight forwarders. We're all here to help you succeed. And of course, have to give shout outs to the U.S. Department of Commerce, the District Export Council, World Trade Center. Everyone listed on this slide is happy to help guide you so you can succeed, because if you succeed, Arkansas succeeds. And I know we have a few more minutes, so what questions can I help you guys with today?
Well, one of the questions that has come up, and I think it's something that everyone is interested in, is the cost of doing the fees that are involved in acquiring a letter of credit. And obviously that's something that is different from bank to bank, but can you give us kind of just a sense of what those expenses are to to an exporter?
Yeah, so it depends on the product, first of all. So if you are looking for a letter of credit, since that is credit based, it depends on your credit rating. That will absolutely affect what the rates there would be. It also depends on the invoice size. So based on those two, I couldn't really give you an amount because it does depend on the invoice size and your credit risk grade. But I know here at Arvest, so let's say you are looking for a standby letter of credit as opposed to a commercial letter of credit. Our minimum fee for that is $480. But for commercial letters of credit, it really does range, but I would say, and Jonathan, correct me if I'm wrong here, but somewhere around 120, 150. And for documentary collections, same thing. It depends on those invoice sizes. So you absolutely can get quotes before you enter into that contract, but it just does depend on the invoice size and a couple of different pieces. So if you are interested, we'll just have to ask you a few questions and we can let you know what those fees would look like. And from there, you can decide if that's something you're interested in pursuing.
Yeah. And another question that was asked by Mr. Torres, I'm sorry, Alberto Rodriguez, is so are letters of credit based on a percentage of the commercial invoice value? And I think you answered that, but if you want to add to that, that's great.
Yep, that's absolutely correct. So it's based for letters of credit, it's based on your credit risk grade, and then it's also based on the invoice size. So if that fluctuates and changes, you can decrease those fees as that changes as well. But yes, it is based on that invoice size.
And I will add to that, no matter what the fee is, the value of a good night's sleep, of knowing that you're either getting your product or you're getting your money, depending on if you're importing or exporting, is worth whatever the letter of credit is.
Yeah, absolutely. At the end of the day, this series that we're doing, not only on the finance side, but every webinar that the RDEC is putting on the behalf of the Economic Development Commission and the Arkansas Manufacturing Solutions Department within AEDC is about risk mitigation. If you are comfortable in exporting, that's a good thing for everyone because it increases the wealth of Arkansas, creates more jobs. And so all these different webinars that we put on are about, in essence, risk mitigation. And so at least a significant portion of them are. And certainly this entire financial series, of which there will be 2 more in the coming week and the week after, it is definitely about risk mitigation, making sure that you do have an option to take on work that you might otherwise not take on, and make sure that you're are going to be protected on the downside to make sure that you in fact do get paid. And so that's the purpose of these series of finance webinars. We want to make sure that you go in with your eyes open and know that there are in fact both financial options, and also that we here at the Arkansas District Export Council are here to be able to help you any way we can so that you can export, which is in the best interest of everyone. Any other thoughts or questions, anyone? I don't see any other questions at this point. Apparently somebody had a problem with hearing 2 people at the same time, but I think they figured it out. In any case, well, ladies and gentlemen, this is the end of today's webinar. Heidi, do you have the topics for the next 2 finance webinars that are coming up same time next week and the week after? Yeah, there you go. Okay, so those are the next 2 webinars that we're going to have. One on November the 2nd, which is a week from today at same time, 9 a.m. Central, on trade credit services. And then the last one will be on managing currency risk. And so we invite you all to attend these webinars to get more informed and make you a better exporter and a safer exporter, and open up additional opportunities for you. And with that, I want to thank everyone that took took a part in today's webinar. Michelle, thank you so much. Jonathan as well. And here, would you go ahead and throw that slide back up, Miss Heidi, with her contact information?
Miss Heidi, I can send you the slides. I saw there was one note.
There we go. All righty. So there's Michelle's contact information and mine as well. And if you need to get a hold of our contact person at the Arkansas District Export Council, that's Miss Heidi Whitman, and there's her contact information as well. We invite you to feel free to contact us if we can answer any questions about exporting and also today's product program.
Yes, and one note, I'm going to put in the chat a link to our survey. If you could just wait a few seconds and give us a few minutes to let us know what you think of our webinar today.
Yeah, it's really important that we hear back from you guys to make sure that we are giving you the information that you're wanting, and if we need to modify things, we can only know that if you tell us. All righty. All right. Well, thank you so much. Again, please do respond to the survey, and hope to see you next week at same time, same channel. Thank you again. Bye-bye.
Thank you all.